Welcome to Tesla Deep Dives.
The pivotal topic on our agenda today is the unseen monitor, analyzing Tesla's leap to unsupervised autonomy and the regulatory gap for driverless deployment. The core investment thesis for Tesla has pivoted from EV market dominance to a software-first, AI-driven future, specifically the promise of unsupervised full self-driving, or FSD. The vehicle is no longer just a car, it is a proprietary mobile data center. The high-stakes question is whether the AI technology has truly reached the unseen monitor threshold, where the software is statistically safer than a human, and if the global regulatory framework is ready to legitimize it. Tesla's internal data and crowdsourced metrics reveal a significant technical inflection point. A key performance indicator, the miles to critical disengagement, reportedly saw a greater than 20-fold improvement after the FSD v14.1.x update, jumping from 441 miles to over 9,200 miles between necessary human interventions, according to analyst reports summarizing community trackers. This software progress is underpinned by a robust hardware stack. The newest iteration, Hardware 4, HW4, features the FSD Computer 2, with a notable increase in processing power to 50 TOPS, up from 36 TOPS in HW3, and incorporates higher resolution cameras, enhancing the Tesla Vision system. CEO Elon Musk, despite a long history of ambitious missed deadlines, statements a judge once ruled as corporate puffery, has recently claimed FSD unsupervised is pretty much solved at this point and predicted a nationwide unsupervised rollout by the end of 2026. Bullish financial analysts, such as Morgan Stanley's Andrew Percoco, label FSD as the crown jewel of Tesla's portfolio, seeing it as a real game changer that confers a substantial competitive advantage over EV rivals. Investment banks project that this software and network service segment alone could add an estimated $145 per share to Tesla's long-term valuation, predicated on high FSD adoption rates and the realization of recurring subscription revenue. The skepticism centers on the historical disconnect between Musk's claims and reality, and the company's lofty valuation. The stock trades at over 300 times trailing earnings, PE, leading prominent investors like Michael Burry to call the shares ridiculously overvalued at recent trading prices. Critics also point to the scaling challenge of the vision-only system in adverse conditions, like heavy snow, a hurdle not faced by competitors like Waymo, which use a combination of cameras and LiDAR. The biggest non-technical hurdle is the regulatory gap for SAE Level 3 to 5 autonomy. The National Highway Traffic Safety Administration, NHTSA, is currently investigating Tesla's FSD feature across approximately 2.4 million vehicles, following multiple reported crashes and a pedestrian fatality. Internationally, deployment in key markets like China and the EU is pending regulatory approval and is a Q1 2025 target, with Musk himself noting that Europe is strangling itself with regulation. The first tangible step towards true driverless deployment is the internal robotaxi fleet. Tesla confirmed plans to launch robotaxis in Austin, Texas, without onboard safety monitors in late December 2025 or early January 2026, eliminating the human backup that had supervised operations since June 2025. While Austin trial data implies high safety metrics, the success of the small-scale deployment will be the first true test of Level 4 readiness in a real-world, non-geo-fenced environment.
The market's current position is a paradox. The majority of analysts retain a buy rating, signaling a dominant long-term bullish narrative based on FSD as an AI platform. However, the recent downgrade by Morgan Stanley to equal weight, hold, suggests that high expectations are already priced into the stock's valuation, indicating a cautiously optimistic sentiment that is highly sensitive to any further delays or regulatory setbacks.
Investors must monitor three key indicators. First, the miles to disengagement metric in the upcoming FSD v14.3 and the scheduled order of magnitude larger FSD model release in early 2026. Second, the results and public reporting from the Austin driverless robotaxi pilot, as this will define the commercial readiness of the system. Finally, any movement from NHTSA or the California DMV towards officially recognizing FSD as exceeding Level 2 autonomy, which would signal the closing of the regulatory chasm. Ultimately, the analysis of Tesla's leap is a binary one. If the company achieves a statistically proven, deployable Level 4-5 system, the opportunity is enormous, estimated to be a potential $200 billion market by 2030, according to some analysts. Conversely, any failure to cross the regulatory and safety threshold, a scenario exacerbated by Musk's aggressive timelines, leaves the company exposed to a massive valuation correction, predicated on a software promise that failed to materialize.
Let me know what your thoughts and leave your comments. Thank you for joining us for this crucial deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the Tesla Deep Dives channel, and hit the notification bell. Your engagement fuels our critical research.